Hey, good evening, everyone. Good evening. I hope everyone had an eventful session of trade. Turned out not to be a volatile kind of session. Was pretty straightforward, right? That early dip was expected post open, and post that, the dip buyers were there. The responsive buying patterns came out, and the final expected move, which was to be higher at the close, has played out according to what was expected per the market profile and the order flow we know, right? So this was not really a critical two-way volatile kind of situation, which was expected on account of the surrounding atmosphere associated with the day. A normal 280 point move in the Nifty, 1100 point move in the Bank Nifty. And the best part of it was a pretty streamlined affair. The Bank Nifty wanted to go up, the Nifty wanted to go up. It did after that eventual test of those lows of the series so far, the highs of the series so far, where it made the lows of the session today, and we've seen a move higher post that. Right. I hope I'm audible and I am able to come across to everyone. Can someone confirm on the text chat whether the audio is clear and you can hear me clearly? All right, good. Okay, sounds good. Then we are good to go. We'll be speaking basically about what is ahead of us for tomorrow's session. I'll be joined by my colleague Uttam as well, and he's going to basically draw in some insights from the market profile and the order flow, and we are going to be looking at what can transpire tomorrow. Now, for those who have not traded an election cycle before, an election day before, bear in mind this is one session which comes in once every 5 years, right? So it's not like your regular RBI kind of an event which comes once every 2 months, 3 months, and then you have that volatility for about 10-15 minutes and it's done, right? This is an event which is going to be reacting to a lot of information. So we begin by about 9:15 a.m., by which time the results should come in, and the expectation is that everything should be coming in line with what is been shown in the exit polls, but there could be twists and turns as varying sets of people react to varying sets of data. So there will be some news channels who will provide a faster report than the others. There will be some other news channels who will provide a more accurate representation of what is happening than the others. So it's going to be different moving parts, moving pieces, and depending on what the bigger traders of the market see and build positions on, you're going to see a market moving, right? So now, having said that, for the derivatives cycle, the derivatives part of the market, I know personally a lot of hedge funds they are off for the entire series. So their trading desks have been told not to trade the entire weekly cycle starting Friday, and they're not going to be trading tomorrow. They're not going to be trading until Wednesday. So they may come back into the market on Thursday. So that's one strategy which is adopted by some of the hedge funds. And I would recommend the same, especially if you are not used to volatility, if you have not got experience with a faster pace of markets, I would recommend that you stay out, because this is going to be driven two ways by a lot of people. So the way it works out is the 9:15 a.m. the results poured in, the keep coming in, the trends are already set in. By about 10:15, 10:30, a definite sign is in place. By about 12 o'clock, 12:30, you have concrete results on the ground. But between 9:15 and that 12:15, which is that first 3 hours, you're going to get a lot of chop and churn depending on what I just mentioned to you, different people reacting to the different sets of results coming in, right? About 12:15, 12:30, we have some solid ground and evidence for us to respond to about the possibilities at work, and the correct math is for the market to look at. And that's the time the second wave of the move starts taking shape. So you'll find the institutions now start coming into the market. They have data, they are responding and building positions to that data. right? And this should continue between 12:15, 12:30 to about 2:30 to 45 in the afternoon, following which we should get that final move into the close, which is that K period, L period, and M period. Those who are not new in the market profile, that's a period between 2:15 and 3:30 p.m., where you will get that final reaction to what can possibly happen. Right. So again, just to spell it out clearly, there would be three different cycles at work. The first 1 hour of trade is going to be that the testing of waters kind of kind of an environment. Then that 12:30, the G period, H period, the 12 to 1:15 period is where some firmness is expected and a proper trend is expected to take shape and to plane. And then we have the K period and the L periods, the last 1 hour, which is going to be a firmer reaction to the news of the day. Right now, this is three different trends and three different sessions in one particular session. Right, and the way we look at this is a higher range day, but the higher range is actually coming down in a 30-minute period. Right, so what we generally tend to say is on a volatile day, an entire session gets traded within half an hour. Right, I'll repeat that again. An entire session gets traded within half an hour. That is one TPO for us. So what may happen, generally with a VIX of 12 and 14 over a 9:15 to 3:30 p.m. session gets done by about 9:15 to 9:45, and we saw that in the morning also, as that market opened up around what it was about 23,450, and we came down to about 23,150 in the very first 45 minutes of trade. So this is a typical 300-point move, but instead of happening over span of one day, gets done in 30 to 45 minutes. Now what does this tell you? This tells you that you have to be a lot more quicker to make your decisions, and it's in this particular area where a lot of traders lack. They are not responding to that information fast enough, and the market is quickly moving about. Your trades are not happening at the same pace, or you're not one of those quicker minded decision making traders, the kind of trader who's got a clear head, clear mind. And I think that is an asset for our kind of business, for the work which we do in the derivatives market. Having a clear mind and a quick decisive mind is a very strong advantage to us as traders. But if you're not one of those kind, and you're not used to making quick decisions, or you're not used to making a fast moves, trades in and out of the market, my advice to you would be to stay out, because there are other days which you can trade. By Thursday, Friday, things should die down, the VIX should cool down, and you should have a normal situation coming in. But if you are definitely trading, then you got to think of every 30 minutes as one full session, and you got to trade with the volume of one full session in that 30-minute, which means you have to be 6 times faster than you would otherwise be. Right, so this is the broad outline, and we're going to be discussing a lot about what is the in store for us in the markets. But I have the Nifty and the Bank Nifty market profile charts on screen, and Uttam is going to join us, and we're going to be discussing a lot more about this. But the first thing which strikes you about what has happened today is the single prints right here, and they have come in at this point, which is that 23,150 failed auction point, which we highlighted earlier last week. Right, now there's a very simple rule about the failed auction, and it's a process which works for us multiple times, and it works in all kinds of market situations. Never mind the VIX being at 12, never mind the VIX being at 15, never mind the VIX being at 25. The failed auction is a trading setup which works in all kinds of markets. Right, so simply put, the market is supposed to be bullish above a FA point and bearish till it stays below the FA point. So all through last week, the market pushed in this failed auction, and we saw 3 sessions below the failed auction point, which was this right here. Right, and you could have worked out that ATR to ATR and taken profits, etc., and waited for a push back, okay, to the FA point. Okay, now this was done earlier today, and what happened is because of that gap up, okay, we came back and we tested this FA from the top lower 23,150, and so far, okay, this has held. Okay, I'm not saying, okay, that it's going to hold, okay, forever. The market, okay, keeps adding new information. We cannot rely on yesterday's newspaper. We have to rely on current information. The market does not believe in going too much back into what has happened. There is new information coming in, which is new volume, which is new money coming into the market. And this new volume, new data, new money coming into the market is more important than any other previous data which is happening, because there are positions, okay, getting changed. Right. So what is the market telling you right now is that it is trading, okay, above the failed auction point, which was at 23,150, and you got to keep a bullish bias as long as the market trades above this failed auction point. And this would be the most important reference, okay, which you carry with you for tomorrow's session. If this for some reason fails, okay, then this market, okay, is dropping, okay, very quickly, and I do see, okay, that this will go down to about 22,950, maybe, okay, to 22,878 lower also. So mark this, okay, there could be a drop, okay, on any kind of profit booking or any kind of adverse news which is not expected by the market. Now, this is not a political statement. This is about what the market is thinking right now and what is being built in by the market, and we respond, okay, to what the market thinks. And what the market is thinking right now is that the exit polls, okay, are going to be the results tomorrow, right? But in a business which is built on probability, and I'll repeat that again, a business which is built on probability, all kinds of possibilities are open. So you cannot say 100%, okay, that it is going to work this way. That's why, okay, you have a stop loss in place, and you have a plan B in place, because things, okay, can change. Things can work differently at different times, and you have to be alive, okay, to a possibility that things, okay, can be wrong also. So in that case also, we still work with 23,150 as the lower reference, and that would be a sign, okay, that the market, okay, is not got it right today, and there could be a drop ahead. But all good till we are above 23,150, and you can expect, okay, a further upside. Okay, we didn't get that 23,550, which was what the court was indicating, but that could be in store, that 23,620, 23,750 kind of levels, okay, if we hold up, okay, for 23,150. Now, I'm not going too much into the future, and everybody, okay, could tell you, okay, that there is 27,000 ahead, and that's 30,000 ahead, etc. We are focused, okay, on what we are going to be doing, okay, via the options market and the futures market for the course of this week, right? So we are not building, okay, positions in an option contract 3 months down the line, or we are buying a futures contract, okay, from July, August, or September. We are focused on what the market is doing and wanting to do tomorrow, then on Wednesday and Thursday, and by Thursday the weekly settlement is done, and we'll take a fresh look at the market again. Right. So for these next two or 3 days, we look at about 23,150, and we'll see, okay, how it goes off. The bank nifty quickly has pushed higher into a spike. Okay, and Uttam, okay, is going to cover more ground on this. So the spike rules, okay, will apply. Okay, lower down, okay, it is come back, okay, off this level of about 50,050, which was expected, okay, to give support today, and we've seen a rise of this level. So as long as, okay, we are up above this double top, which was created in the 2 earlier weeks, this is a market, okay, which is now a new IPM, or an initial price move, and charging upwards. So you will wait to see if we convert above the spike highs for tomorrow, apply the spike rules, and take it from there. Right. Now, with this said, I'll just hand it over, okay, to Uttam, who is going to give us a detailed outlook on the various levels, okay, we are going to be looking at as we trade into the volatility tomorrow. If you have a pen and paper, I would urge you, okay, to take down notes. These are not levels, okay, which are based on an arithmetic or a mathematic calculation, but they are volume derived market generated information, which means the market is vetted each and every one of these reference points, okay, which will be given to you with volume, and there's nothing bigger in the market than a volume confirmation. Right, so these are the levels, okay, which we speak about, and we know, okay, they are important because the market is blessed them, and I use that word bless them with the sprinkling of volume. right? So we'll look at these levels, and we'll see okay what these levels are. I'll invite okay Uttam to come over and join us, and he's going to be walking us through the rest of this session today. Uttam, your show.
Thank you. Thank you, Shai. A quick sound check. I hope my audio is clear. Good evening, guys. Great. Thank you. So, because we are looking at now a start of a fresh month, so I have the monthly profile chart on screen. And for the monthly profile, we look at spot because futures have lot of weekly settlements option wise, and then we have a series wise settlement. So for futures, we'll come to the references of daily and weekly, but for longer time frame references, we look at the monthly chart. So we just completed the month of May, and we have the profile chart of Nifty, the monthly profile chart of Nifty on screen right now. So what did we do in May? What does the profile look like? We can see we have small tails at both ends of the profile, and we have almost formed an outside bar. Outside bar in the sense we have gone above previous month's high, and we have almost tested the previous month's low. And value wise also we can see the value is been completely overlapping for this month. So what is the profile type? The profile we have made on for the month of May is a neutral center one, because we started an attempt to probe lower. I'll just split this profile so that we can see how the daily had panned out in the month of May. So you can see we had these poor highs from April, which we made an attempt to clear above when we started May. This was, I think, 3rd of May, where we made those new all-time highs of 22794. But we got rejected. And this rejection got us a probe lower where we swiped through this previous month's range and value. And what we did was we tested these references was given mentioned even in our session we had in the month of May, when we spoke about what had happened in April, and we had marked this as an important support zone. So we took support right at that responsive buying tail, and what we did at the lows was we left a failed auction at 21821. So we already had a monthly support zone, and there when we left a failed auction, that was telling us that the downside is getting limited, and now the buyers are coming back. So from that low of 21821, we went on to trend higher, and we even made new all-time highs of 23110. But then once again, what happened at the highs was on 27th of May, we left similar highs in two TPOs. So when you're leaving similar highs, it was 23108 and 23110. So it is showing us exhaustion, either on the downside or on the upside. It is telling us either the inventory is gone too long, or there is too much of selling when we get similar lows or poor lows. So that similar highs on the 27th then was followed by a failed auction the next day. This was a 22998. So as Shai had explained that 23145 failed auction in the futures chart, we had a similar failed auction in the spot also. And that became our reference. And from that 22998, we went on to make a 280R move to the downside. So once we have the failed auction, Chai was mentioning that how we are bearish below the failed auction and bullish above the failed auction. So below the failed auction, we have the measurements in terms of ATR, and and we had the ATR move of 22769 and 22540. So 22540 was one important reference because it was also the weekly POC of last week. I will just open up the weekly profile as well, and we'll see how we kind of settle down exactly at that level. So what we did in May was we probed higher, got rejected, then we probed lower, got support in this buying tail, and then we went on to make new all-time highs. But then it seemed as if the inventory has got too long, and then we made a retracement back to the middle of the profile. So 22479 was the POC. So it came back there, although the close was slightly higher. So what we did was we had formed a balance, and this balance in market profile tells us that value is being overlapped. So if we see on the monthly chart, we can see the last 4 months we have been forming overlapping value. So this is the February month, March, April, and now May. So all these 4 months, what we have seen is we have kind of been in a range, and we have value is overlapping. Although the value of January was little, of February was little bit on the lower side, but we have not been able to move away from this zone. So what we can do is we can actually form a composite of this 4 month value, because it tells us, it gives us a very important cue as to when a new month is starting, because just like the open of the day is very important, the open of a week and open of a month is also very important. So now this time the open of this month is also coinciding with a very important event which comes once in 5 years. So it is actually a very strong case of an open which can give us a fresh imbalance. And when you have this 4 month balance as your context, you can see this is the 4 month monthly chart, and we can see we have formed such a nice balance on this composite. So there is a very good chance of us getting a move away from this balance. Ideally, the balance imbalance starts from the POC. We get the initiative move at the open of one of the days, what we call the open drive or an open test drive from this POC. But today's case was an exception because we had a huge gap up. I'll come to today's profile in a bit. Before we complete having discussing the important levels which we need to take forward for the month of June. So here you have this red dotted line. These references were added before the market opened today because these were the important references for the month of May. So this red dotted line is the failed auction of 22998, which is also the responsive selling tail of the monthly profile. So 22998 to 23110 was the zone of singles. And then we have this value area high, which is at 22577. And this 4 month composite POC of 22481 is what will be our important reference, not for the month of June, but also for the rest of the year 2024. So in case we are getting a definite move away from this 4 month balance, this POC should not be tagged again. Or if it is tagged, we need to get some good responsive buying activity here. So this is the reference going forward. On the downside, this turquoise dotted line is the rollover point for the June series. The maximum volume on the expiry day for the June series came at 22645. So it is similar to what had happened in May. May also we had the rollover point at 22648. So the rollover point is one important reference which we mark and we follow as to uh, just similar to the FA. If we are above the rollover point, we will be bullish for that series. If we are below the rollover point, we would be bearish. So now, as we can see, this value area high would be the most important reference, 22577. So for any reason we break below this value area high on a closing basis on any of the days, we have a very good chance of completing the 80% rule in this 4 month composite. So this dash line is the responsive buying tail of this month, which was at 21932. 21932 to 21821 was the buying tail on the monthly chart. So this is what the monthly balance composite looks like. And now let us see what we have done today compared to this balance. So I'll just increase the TPO size so that we can have a better look at the. So we had a huge gap of 807 points in spot. So from this reference, if any of you has gone through the monthly report which was posted today morning, we had mentioned that the upside objectives for the June month would be 2 23251, 23520, and 23615. 925. So what was that reference is based on? Because we have formed a 4-month value and we are looking to move away from that value. So a move away from this value, we look for 2 IB and 3 IB targets, which is double of that value area size. So that will be one probable objective. So that is how we will look at in terms of what the upside references would be, because these are new highs and these are uncharted territory. So we don't have previous references of supply here or any such reference which we can make note and see if that is holding. So another very important aspect I will show you, today's low. If I take the daily chart of spot, this is the daily chart of spot, and you can see this is the 27th of May where we made those similar highs, and where we made a change of character from that JTPO, because till that time we were making higher highs. F, G and H made higher highs, but the break of H period HTPO lows signaled that the auction has changed character. So from looking for more upside, it became a neutral auction, neutral day. And this scene of crime was right here at 23060. And if you see the lows today, it took support, the B period low took support right at that level. So you can see how these market profile references continue to remain very important. And even if they are on the other side, for example, this was actually a supply point, but now that it has been taken out with a gap up. Once it came down, it tested that and it held. So this level was showing change of polarity. So this is how we need to watch out for the next reference, which is this failed auction of 22998. As Shai mentioned, 23145 will be the all important level for tomorrow. So for any reason, if this FA is breaking, it is signaling that the gap up which has happened today has lost steam. So which we'll have to keep in mind that when we are trading, especially in the first uh, session of the day. As I explained, we'll have the day would be divided into 3 sessions. The first session would be the most volatile, because the news would just start to come in and things will not be that clear. So that will be the time where we will have to watch this level, and if there is a break of this level, we can look for downside to come. And another very important aspect I would want to repeat here is the failed auction. Why we give so much of importance to the failed auction? So as we can see, once we got this failed auction on the 28th of May, we went on to complete the 280 target of 22540. So you can see this is 22541 is exactly this 2-day balance which we closed on 31st of May. And the close also of Friday was almost at the same place. So what does a failed auction do? Now that we opened with a gap up above the failed auction, so automatically what we look for is the 180R and 280R targets to the upside. So the 180R target, you would be surprised, from this failed auction was coming at 23228. And if you see today's POC, the POC of today is exactly at the same level. So this will be one very important reference for the open tomorrow. So if we stay above this 23228, we are looking for the 280R move from that FA of 22998, and the 280R target comes to 23456, which was also mentioned in the monthly report. So that will be one of the objectives on the upside. So looking at today's daily chart, what would be the references we will take for the open? So very clearly, because this MTPO was more of a spike, although we did not make new highs, we still remained in the initial balance. What we'll do is we will have this MTPO low as our first support, which is at around 23264. So 23264 and 23229 would be our references on the downside, below which we have this important pullback low of 23160. So the market profile leaves such important cues behind, which we need to make use of in the following sessions. So for any reason we are getting a swipe down during the day tomorrow, we will have to see if these references are holding. 23228, 23160. And finally, it would come to this point of 23060, which I mentioned was showing change of polarity. If this 23060 gives way, then we are looking for a test of this FA of 22998, and if we break below the FA, then it's it can be a big bigger drop which can come during the day tomorrow. So this is how Shahid showed in the futures chart. I'll come to the futures chart at the last, but these would be the downside references for tomorrow. 23228 the POC, then this pullback low of 23160, then we have a B TPO halfback, because we moved higher in the B and we left this responsive buying tail. So we will have also one more point I would want to mention here is, because we have moved away from this all-time highs, this 23110 also will need to show change of polarity like this 23060 showed us today. So tomorrow, in any case, we come down, we break below this pullback low of 23160, we will have to look at this 23110 to hold. So 23160, 23110, 23060 are the three important levels in spot for tomorrow. So break of 23160 will negate all bullishness which today's gap had gotten, and then this FA would become one crucial level for us to hold on the lower side. So this is as far as this Nifty spot is concerned. A quick look at the weekly chart of Nifty spot. You can see how the weekly charts have been giving us overlapping value. There has not been a clear trend in play for a long time. So except that, this VPOC of 21665 was holding. So what we did last week was we opened higher on the week of 21st to 24th May. So we opened higher. I'll just zoom it a bit so that we can have a clearer view. And we just kept trending lower. So one important thing what happened was the POC of this weekly profile was a 22950. But what it did was into the closing days, the POC shifted down to 22541. So that is the reason I was telling you why this 22541 is one important reference for us. So this meant that the sellers who had come in at the higher levels were booking profit, and this was a responsive buying pattern. So now this was clearly telling the sellers are no longer there, they have booked out. So today's gap up, it should definitely have to do with the news which was very clear that it would come out. The exit poll was anyways due on the Saturday, so people wouldn't have carried naked shorts. It would have definitely been hedged, but now it is very clear that we are cleared these weekly highs. So as I mentioned on the monthly and the daily chart, now we should not be returning into this zone of the previous week profile, and we will need to form value higher than this zone. So this is what we will look for tomorrow and the rest of the days for this week in spot, and we will need to form value above these highs. So if we are able to do that, and if we, on the daily basis we continue to form POC higher, we know that the buyer is in control and this is a fresh imbalance which can go on for some more time, till unless we get clues that it is getting exhausted or it is taking a pause. So this is as far as the Nifty spot is concerned. I'll quickly move on to the Bank Nifty monthly spot chart and give you the references for the month of June, which we have carried forward based on what happened in May. So Bank Nifty has made an inside bar. Bank Nifty in April had a profile which had tails on both sides, and these were not, none of them was initiative tails. Both of them were responsive tails, which means it was probing lower. It got responsive buying and it left a buying tail, and then it made new all-time highs on the 30th of April, and it saw big profit booking where it left a responsive selling tail. So we had responsive activity at both ends. So it was not a surprise that we remained inside this profile of all of May, and we have formed a neutral profile where we tested both the extremes. We tested the buying tail of April, which was at 46982, and if I can recall, the low of May was 46983. So as in Nifty, we saw how we took support in the buying tail, which was a zone. Here we have taken support exactly at the start of the buying tail, and even in Bank Nifty we left a failed auction at the lows, which is what gave us a swing reference. It told us that the swing is changing. And this we had covered even in the previous sessions of how a failed auction gives us very important reversal points. And this was one huge reversal point. So from 46983, we have almost come up 5,000, 4,000 points today if we consider the gap up and the highs of today. But we'll come to today's chart in a bit. Talking about the monthly chart, we have again tails at both ends, even in the profile of May. So it is kind of seen that the Bank Nifty was coiling and it was ready for a move away from the balance. So the value area, if you see, was almost inside previous month's profile. So these are indications which tell us that the profile is kind of consolidating, and now you can expect a move away from this profile. So now the move did not happen with a drive, but it happened in form of a gap up. So we will have to see if we ever get an entry back into this zone if we are getting responsive buying activity. The rollover point for the June series is at 49047, which would have been our first reference on the upside because the spot close on Friday was below it. And the value area high of the month was at 48881, which would have been our first zone of support. I'll show you the daily chart of Bank Nifty of how we closed in a nice 3-day balance. So, and we whenever we are forming a nice balance, it is time for the auction to move away from that balance. The extent of the imbalance is not known till we open the next day, and how we make range extensions and how we form values. But it is very certain that once a balance is done, we can expect a move away, and we can expect that move to continue, which will be based on a daily day to day confirmation. So the rollover point is at 49047. We have the series VWAP at 48367. So this 48367 was the series VWAP for May, and this will be one important level for us to watch. And it is also the rollover point of May series. When the May series started, we had the rollover point right there. So when we ended the May series, we saw the auction taking support at that level. We made a swing low of, I think, 48313 in the last week before we moved higher by almost 500 points. The POC of the monthly profile is at 47726, and we will have that as the lowermost support for this month. And finally, we have that FA of 46982. So this is what the Bank Nifty spot chart was looking at, and before we got that huge 1906 point gap up today. And what the gap up has done, let us just see and look for references which we need to look for tomorrow's session. So this was the all-time high we made on 30th of April, which was 49974, and we can see how we made similar lows in Bank Nifty in the initial balance today. So as I was talking about poor highs and poor lows showing signs of exhaustion. So when we made these similar lows in the spot, it was clear that it was not ready to go down. And from there, Bank Nifty started to reverse higher and finally closed in a spike. What will be the spike rule? The spike will take the MTPO as the spike. M lows would be the spike low. So this low of MTPO, which is at 50952. So 50950 would be our first reference, and above the spike we would remain bullish. If we remain in this spike, the auction would be bullish, but it is expected to consolidate. But the spike is not a big one, so we can easily expect this spike high to be taken out in the morning if the results are also in sync with what the expectation is. And with this low being the reference, we can look for more upside objectives as per the open type we get tomorrow in Bank Nifty. On the downside for tomorrow, similar to Nifty, we will have the support at this POC of 5816 and this pullback low, which is also near the halfback. So you can see clearly in this chart how many things are overlapping here. The seaside high was also around the same place, and this pullback low also around the same place, and the day's halfback is also right there at 5612. So in market profile, we'll get many overlapping levels, which will just keep confirming that importance of that support or the resistance which we have seen. So 5612 would be an important reference with this BTPO halfback of 5292 in Bank Nifty. So if we for any reason break below these two levels, the halfback of 5612 and the BTPO halfback of 5292, we will need for this reference to hold. We had a small responsive selling tail on the 30th of April, which is at 49995. So because we have had a gap up, the gap up midpoint is also around the same level. So as I was telling you can see lot of change of polarity happening when the auction changes the character. I have the daily spot chart, and this is the 30th April chart, and you can see this JTPO high is at 49950. So this would be our important reference. So break of this on spot tomorrow would be a bearish sign. So we will need to hold this 49950 on any dip we are getting there. So if we break that, then the scene of crime from that day of 49818 would be our lower reference, and a break of that will take us down to the lower untouched areas which we had not tagged till the 30th of April, from the 30th of April. So this is how we are placed in spot. On the weekly profile, you can see this last week's high was right stalled right at the value area high of this particular week of 29th April to 3rd May. So now that we have taken this off, we will expect this to hold. So this 49680 and this 49950 would be the important support levels for Bank Nifty spot for tomorrow's session. On the upside, it is a free bird, and this is uncharted territory. So we will need to take, as Shai mentioned, every TPO as a session, and we will have to see what every TPO is living, what clue every TPO is living, and accordingly keep trailing or holding positions. So if we are be bullish for tomorrow, we will want every TPO to make higher highs. If not every TPO, at least the overall trend of the market should be higher. We should get multiple range extension after the first hour is done, and we will need to hold VWAP if we are looking at the futures chart. So coming quickly to the futures chart before we wind up for the day, we have the Nifty profile chart, Nifty June series profile chart on the left, and the Bank Nifty profile chart on the right. So you can see the Bank Nifty in the spot, we did not see such a big spike, but the futures has given a quite a big spike in Bank Nifty. So this spike is from 51210 to 51480. So we have had a big 350 point 250 point spike zone, so which will be the reference for tomorrow's open. So in futures we get lot of other important data available, which is the VWAP and the POC of every TPO bar. So this VWAP and POC becomes more important on days like tomorrow and today, because every session, every TPO uh, is a big play. So we will have to carry forward these references, and we will have to make sure that we cut down on positions if we are seeing the auction is negating our bias or the view which we are having. So we both of them are at new all-time highs. I'll just quickly zoom this to check where the previous highs of Bank Nifty was. So we can see Bank Nifty futures had made similar highs in this 50,085 zone. So this 50,085 would be the support in the futures, June futures, along with this VPOC of 50,012. So this is what we will have to hold on the downside for tomorrow. If we negate today's references of this POC and the VWAP. This VWAP has also got an extension handle today. The A period high, we had left an extension handle. So this 5873 is one important reference for tomorrow on the downside. So we will have a report which will be published. We will have all these references marked. So you, even if you're not made a note of them, you can refer that report to uh, get back these levels. So the spike lows, POC, and the VWAP would be the references on the downside in Bank Nifty futures for tomorrow. Whereas the Nifty, Shai had already mentioned this FA point would be the crucial level to watch. And then today we have closed in a small spike. So this 23,400 would be the immediate reference, which is the MTPO low, and then the POC of 23370 and the VWAP of today, which is at 23320. So below these levels, we have this B period buying tail, which is what is telling us that we have moved away from this balance. So these would be the important support zones for tomorrow, and break of this will negate the bullishness. So let us see how we take this forward, and you can see how this low of BP rate stalled right at this FA point and also has taken support at this VWAP, which is a neutral extreme day. So neutral extreme VWAP is got lot of importance, and till yesterday it was on the upside, but in this gap up it has now become a support zone. It has shown change of polarity, so we will expect this to hold again. So this is how we are placed for tomorrow's all important results day. So let us see how it pans out, and let us make sure we are at our best version, so that we are not we don't lose money in the trades. We will have to be very fast, especially as the day goes on. The initial part would be very volatile, and then as Shai mentioned, maybe in a couple of days time the VIX will then fall, and then it'll be back to a peaceful kind of an auction in Nifty. So there's a question, Bank Nifty spot, what are the upside levels? Bank Nifty spot. So these are new uncharted territory, Kedar. So we will have to, first reference would be the spike high. If we remain above the spike highs, then we look for higher references, which would be the 180R from today's POC. And then accordingly, once we form the initial balance, we will take ranges based on the initial balance range. So the upside is open in both, and we will have to see how the open comes up and what is the range of the first hour. And based on that, we can take the more probable targets on the upside. So that's it for today from our side, guys. So let us hope tomorrow turns out to be a very good, profitable day for all of us. And make sure you are at your best version. So signing off for now, and let's rock it tomorrow. Thank you for joining in, and we'll be back with a similar session maybe on Thursday, where we can make a review of what has happened post the election results. Thank you, guys. Signing off for now.